Greetings, fellow traders. So today I am going to be going over how to use buy stop and limit orders and how to manage open trades that are negative. Last week we had some very tricky market conditions. So if you guys had a rough time last week, don't beat yourself up over it. It happens to the best of us. And I'm going to show you guys how we can win for this week. So let's get into it. All right. So first off, right now we have we're doing a little bit of review because we had a change of conditions. So for those of you who are brand new to Forex, this video is beginner friendly. Most of my videos are not because I speak to more experienced traders, but I'm going to start having more videos that are beginner friendly. So you have four different phases of the market. You have trending conditions, number one. You have consolidating conditions, number two. You have ranging conditions, number three. And you have divergent conditions, number four. So the week before last week, the market was in a very strong trend, and I'm talking specifically to gold. So it was a much different strategy when you're trading trending conditions. If you guys noticed last week, the market was consolidating and only had big moves right before major news events. And that just threw everything out of whack and made everything a little bit harder to trade. So looking at my chart right here, you can see that I have a buy stop set on this line right here and a sell stop on this line right here. So basically we have a buy stop set at the resistance area and we have a sell stop order placed at the support zone. Now, the secret to using limit orders and stop orders is all about timing. So when you are trading a consolidating condition, you want to make sure that um, when there's a news release scheduled at a certain time, that's when the market is going to make its big move. So you want to place your trades, your stop orders and limit orders about 15 minutes before the news release. If you place your trades too early, you might get stopped out too early prematurely, or you might be in the wrong direction. So this right here is an example. So uh, what we want to focus on is the area between these two lines. So uh, if you go to your Forex factory and make sure you're using the one for your time zone, you'll see when big news is scheduled. If you're trading US dollar currency pairs and there's big news scheduled at 8:30 in the morning, Eastern Standard Time in the US, then you need to make sure that you're using the right time zone for your country so that you know when to expect those big moves. So you can see here, this was Friday, November 17th at 5:45 a.m. And then you can see here, this was Friday 17th of November, and this was at 8:15. So the news was scheduled at 8:30, and this right here is when we are going to make our decision as to where we want to place our stop orders at and where we want to place our limit orders at. Okay, so in this situation right here, we would have created our resistance lines and our support lines at this area. So let me explain why you want to use like the most recent time zone. Let's say, for example, I was to use this range from back here. Okay. Now this happens sometimes based off of your where you live. Maybe you're going to bed and you don't want to wake up at 8:30 in the morning for the US session, or maybe you have to go to work, so you don't have time to place a trade. So you're just like, you know what? I'm gonna go ahead and place my stop orders or limit orders and hope for the best. Sometimes it works out, but most of the time it doesn't. So if you had placed your buy stop order here, your trade would have got triggered. It would have went up, but by the time you check your trade, most likely you would have been stopped out. So this is why I say timing is so critical when it comes to setting your stop orders and your limit orders. So ideally, what you want to do is wait about 15 minutes before the news release and then use that time period. So you can see the difference here. If we use this period right here, we could even use a tighter area. We can avoid a lot of the foolishness before this all sets up. And then at 8:15, we have 15 minutes before the news event. And then we would place a buy stop order here. And then we would have a sell stop order here. So look what would have happened in this situation. If we had placed a sell stop order here, our trade would have got triggered and there had been no pullback whatsoever. And when it comes to trading gold, you are usually safe with using 100 pips for your take profit. And then, of course, when it comes to setting your stop loss, you want to use the resistance area for your stop loss if you're selling. And then if you're buying, you want to use the support zone for your stop loss if you're buying. So the key to this is making sure you're using the 15-minute time frame, because if you use the hour time frame, it's going to be too long and you won't be able to see the 15-minute time zones, which is what you really need to be able to see to use this strategy effectively. Okay, so this one here is one example where you could have used it, and then we can look at other areas and just look. I mean, had you sold here, you would have had no pullbacks whatsoever in this situation. And I'm pretty sure there's another area on the chart that we could have used this approach. And you can just see there is a lot of consolidation on gold, and it just made things very tricky. So you were almost forced to trade news events if you were trading gold this week. All right, so here's another beautiful situation. So you can see here you have, let me go ahead. So you have this unique situation where all this consolidation, right? So we would have had a buy stop around here, around this area right here, and we would have had a sell stop around this area right here. And again, you can see here, this time right here is 8:30, and there would have been a little bit of a pullback because your buy stop would have got triggered right around here. It would have pulled back just a little bit, and then it would have taken off, and you would have been in a beautiful setup. Your sell stops would have not been triggered, and you would have been on your way. So when do we use limit orders? Limit orders can be a little bit more trickier because obviously you want to get the best entries that you can. But a lot of times limit orders don't really get triggered. So let's say, for example, I try to use a limit order in this situation. Well, if I use a limit order at the support zones, then my limit orders is not going to get triggered. So a lot of times when it comes to using limit orders, you're trading pullbacks. Okay, that's very important that you understand that limit orders are designed for pullbacks. So let me switch to the 1 hour time frame. And let's look for an area on this chart where you would look for a pullback. So in this situation right here, we have this red candle right here. When you see like these doji looking type candles, then this is a sign that there's going to be a reversal. You have a massive supply zone and you have very little demand, which means in the future, you're going to have a downtrend. That's usually what these candles mean. So in this situation, let's say, for example, I missed my entry right here. But then on this next candle, you see there was some demand that was being built, and you're like, okay, you know what? I definitely want to sell because I know that this is a strong supply zone. Now, in this situation, I'd want to set a limit order right around here, or close to the top of this previous high right here. So in this case, you're expecting the price to pull back. So somewhere around here, you would set a limit order, maybe 1949 or 1950 or something like that. And this is why I say a lot of times limit orders don't get triggered. But this is a scenario where you would use a limit order just so you can get a better entry because based off of this candle that a downtrend reversal is on its way. And then you can see what happened. The price went down. But then, of course, we had big news on the US dollar at this time. So it would have been a little tricky. This is why I don't like using limit orders as much as I like using stop orders. When you use stop orders, you are trading in the direction of the trend. So if your trade gets triggered here, it's because the price broke the resistance area and has strong momentum and is most likely going to push up. So that's why I like doing that. And you can also see here, we're trading on the 1 hour time frame. And look at this nasty candle right here. So if you had traded off the 1 hour time frame and you would have and you had like buy stops and sell stops or buy limits or sell limits triggered, this one candle would have probably triggered all of those entries, and then you would have got stopped out on most of them, if not all of them, because you can see here the price did shoot down pretty far below the support zone. So this is why I'm telling you guys, make your trades based off of the 15-minute time frame. But when it comes to like your overall analysis, you can use the longer time frames like the 1 hour, 4 hour, and the daily, but base your trades off of the 15-minute time frame because each candle represents 1 hour of data compared to the 15-minute time frame where you can have 4 candles and within that 1 hour that's giving you a lot of data and is most likely going to be more accurate for your entries on the 15-minute time frames. So this is why I like knowing my overall picture on longer time frames, but placing my trades on the 15-minute time frame, especially if I'm dealing with a lot of news. Okay, that's very important, guys. And what I want to do now is I'm going to go into my MetaTrader 4 and we're going to take a look at some negative trades that I currently have open on my $50,000 prop firm account. And I want to show you guys how I'm going to manage that. So if you guys have open trades, you guys definitely need to check this out, especially if you're new to trading and you don't know how to navigate that. All right, so let's go to our MetaTrader 4 and okay, so now that we are inside my MetaTrader 4, we can kind of see what my situation is looking like. So for those of you who know my swap fee strategy, you guys can see how powerful this is. I mean, look at these juicy swaps right here, crushing it with the swap fees. Yes, I am negative, but I'm not really worried about that because I know this is going to work itself out. I did place a buy order just to kind of hedge a little bit. I kind of regret doing this because I really feel like this was unnecessary to make. So this was kind of a little bit of a mistake on my end. But I'm not gonna sweat it. I'm just gonna recover uh those these losses and just keep it moving. So when you have open trades that are negative and you don't really want to take a loss, what you have to do is keep on finding winning trades. So this does take a little bit of skill to do. And if you are a student inside my program and you are facing problems, one of the things you're able to do is reach out to me and say, "Hey, Jeremy, I got a mess going on over here. Can you please check out my trades and tell me what I should do and how I should navigate that?" We can do a Zoom session, and I will happily jump in and look at your situation and say, "Okay, you know what? Here's what we got to do." And a lot of times, I'm able to recover your situation as long as you haven't put yourself in too much of a hole. But in this situation, I have a $50,000 account here. So with my equity being at 49,556, I am only negative roughly 1%, but that's not that big of a deal. With this account, I have a $2,500 daily loss limit. So I can navigate that pretty well. And I also have a EA that I use that kind of hedges against my mistakes, which also gives me peace of mind too, because my robot works pretty well. So I will keep my robot running pretty much every day, and it usually bags about 50 to 100 pips for me. Um, and this is why I use a VPS. So this is for my EA, and it works pretty well. So even though I have these losing positions, at one point my balance was down to $49,100, but I kept finding winning trades, and I was able to keep recovering that. And you kind of see here, I'm close to getting back over to 50,000 in terms of my balance. And then when the market opens on Sunday night, for me, then I will be able to look for some more winning trades. And then if I can manage this negative $435, but then add like $400 in profit, then if these trades are still open, I can close these trades and I can still end up breaking even. And that's even if I have to. If we look at the charts here, we can see that gold is making a correction. And with this correction in place, it looks like things will work itself out and I should be able to close my trades. In this case, if I get to 1960, I can close those trades and make a small profit. And this is why I love my swap fee strategy. Even if I break even and close my trades at the entry level, because of the profit from the swap fees, I can still actually end up with a profit. But then you see here, I have this beautiful entry on gold at 1981. So what I'm hoping can happen is the price can shoot up to 1985, 1986, so that I can at least close this buy order and then place another sell. And then if I need to, one idea is to open up a bigger position with like a 0.50 or standard lot size. And then with like 50 pips on the standard lot size, that right there is about $500. And then that right there would cover this loss. And I can look for other trades like on the Australian US dollar, Euro US dollar, and I can always find ways to make things work. One of the things I wanted to point out is that last week, gold is no longer in correlation with the US dollar. This happens with gold every now and then, where it all of a sudden just wants to break away from the US dollar. And I can kind of show you guys what I mean with that. So okay, so this is what I'm talking about. You can see right here on the US dollar that there is a negative 0.55% currently. And then with gold, there is a negative 0.02%. So typically, what you should see is if the dollar is negative 0.55%, then gold should be up negative 0.55%. So when you see that much of a difference, that's when you know, okay, you know what, things is out of whack right now. And usually when that happens, it's because gold is kind of seeing what is happening before the US dollar is. So if gold starts to drop like this, even though the US dollar is also dropping, it can predict that the US dollar is going to come up. So it's going to start making its move now before everyone else starts to see what is happening. And that's usually the way gold works when it breaks the correlation with the US dollar. Okay, guys, that is it for this video. I am happy to have each and every one of you here. If you have questions, please let me know in the comments. If there is something else that you want me to cover, please let me know, and I'll be more than happy to do that for you guys. And let's get some winning trades this week, and I will talk to you guys soon.